So this is weekly commentary 61. Now, from the previous weekly commentary, I was expecting, well, I was favoring a lower weekly expansion on the DXY. If we go to the weekly time frame very fast, we got caught in an inside candle essentially. Now, what's an inside candle? It's when the candle doesn't take out the previous candle's high or the previous candle's low and is inside of it. Now, what does this show? It's an underlying accumulation. Look how small this candle is, right? Compared to the ones before. It's essentially half of the size of the previous weekly candle. Now, what does that show? If you go to the 4 hour, it's very evident. This is essentially Mondays from Monday, right, to Friday. This was just a chop, right? Now, if I just put this here, what follows an inside candle? What follows, accumulation? Usually is an expansionary move, right? It's very likely there's going to be an increase in volatility in, the next few weekly candles at least, given that this was a very tight range. Now, I'm still favoring a short dollar and a bullish euro. And the reason is as follows. If you go here, right, and you take your monthly candle of April and you line that out and you label that your monthly open and just trace what price has done, right? So price opened, we shot up higher and we came down lower. Retraced into a bearish PDRA in this rejection block and we expanded down lower and we took sell side liquidity. Now we have a bearish fair value gap here in the premium of the range from this high to this low. As long as this, right, as long as we're underneath this monthly candle, I will favor a short weekly bias, right? You see how we're respecting bearish PDRAs inside of this monthly candle and how we're staying underneath the candle, but it all started from a run above higher, right? You see when you open the candle and you run above higher and you expand down lower, it's very likely you're gonna, as long as you're underneath this monthly open or whatever open you're using, the daily or the weekly, it's very likely you're just gonna start making the bearish expansion of the range, right? Now, of course, if we start to creep back up above the open, you can essentially see it's going to be like an end of the month reversal. There's not long left inside of April. Essentially, it's this week, and then the following week is going to start, May, right? But for the rest of this month, I'd favor, us staying underneath this monthly open and still, you know, make ways to make a new low on this daily chart, right? If we go to Euro, it's the same thing, right? This monthly open from here, right? So you have the 31st of March here, the open of the next candle here, because you see there's a bit of a weekend between the two candles. Now, what happened was trade lower, right? Traded lower, expanded higher, came into a bullish PDRA and expanded higher. Now we're above the monthly open, right? We're still holding above the monthly open. So I'd favor a bullish Euro USD and I'd only sieve out long Euro USD trades over shorts, right? Well, I'd want to entertain more long positions, right? Because I feel like the daily expansion is going to favor a lot more upside than downside. Therefore, if I can find a long, I can probably sit in it for longer. Now, if we go, what is this yellow box? If you go to the monthly, this is where I want the monthly expansion to head towards, right? There's a fair value gap between this candle's low and this candle's high. Now, I want you to focus on the H here, the open, high, low, close. It tells you the highs and the lows and the opens and closes of the candles. The high of last April's monthly candle comes in at 1.10762. This year, April, 1.10758. You see how it's a few pipettes off, right? Like half a pipette off being exactly equal. You can deem this high of last year's April monthly candle to this year's one relatively equal highs or equal highs, right? Now, that's a pull of buy stops, and I want to see us trade into it, right? For pound, you could favor this move up into this fair value gap here. This down close candle, I don't want to see this down close candle essentially get exceeded, right? I'm seeing this holding as a bullish order block. I don't want to see this candle get traded through on the monthly, right? And I want to favor the move into here for GBP USD. For the S&P, from the previous weekly commentary, if we go on the daily, we were favoring the move, and I'm favoring the move higher, and I want to see a bodied candle zap through these wicks and essentially get above here, right? You see how we're just wicking here. This is influencing retail resistance, right? There is a large pool of buy stops accumulating around this price level, around from here, these highs here, and now we have this high here, right? I want to see us trade above this area here. There's a large pool of liquidity here that I want to see the market kind of magnetize towards. If I was trading the S&P, I'd only sieve out long trades over short trades, right? This is what you guys have to do, right? Find higher time frame candles to work into. Now, the daily candle is the name of the game, right? It's always a daily power of three, which is the name of the game for day trading. You want to find out where that daily candle is likely to expand towards, the areas that that daily chart is likely to move towards, right? Focus on this, right? Because I have a lot of you that send me analysis like, can you check this out? And you do something like this, and it's what you see on YouTube, or if you came from somewhere else and you see it, it's quite popular. They do something like this, right? They do like all of this stuff. This is irrelevant. We don't do that. We don't care. Well, I don't care where price is going to be in 10 daily candles. I want to know where price is going to be in the next daily candle, because that's the day, that's what I'm trying to trade in. I'm not trying to trade in the next 20th daily candle that's going to print. I'm trying to trade in the next daily candle that's going to print. So I'm trying to understand where is that daily candle likely to trade towards, right? Now, when the daily chart is unclear, like the DXY, right? You see like this is very sideways, right? You see how this is very sideways? Well, when you go up a time frame to the weekly, to the monthly, you know that the daily chart should always be, coincided and in line with the time frames above it, right? For example, if you're expecting a bullish day, you're waiting for that 15-minute chart to show, bullish signatures for you to then entertain your bullish daily bias. So if the daily time frame is, a bit unclear to you, fall back to your monthly opens, right? Like how I showed you here, how we traded above it, right? And you see how we're underneath the monthly candle, and we're underneath the monthly open, and we're inside of a bearish PD array on the daily inside of the month, underneath the monthly open. This is how I'd favor a short bias, right? Even though there's chop here, I'd favor a short bias, and I'd only still look to sieve out, short DXY trades on a intraday level and a swing trading level, right? This is what you have to do. Exercise your energy into understanding where is that daily candle likely to trade towards, right? When you inside of chapter 2, you learn your PD arrays, right? Use your current range, right? High to low. Now, the highs that you want to use are highs that, should be intact. For example, this high, right? We came from a bearish PD array. Look at where the high was made and look above the high. For example, let's say like this high. This high, I would be, I wouldn't really like to use this high as a swing point. Why? Because to the left of it, there's a fair value gap. If there is something above the high, like a fair value gap, don't trust that high, because that high can get institutional order flow entry drilled above into the fair value gap and then down lower. You want to make sure that the highs that you're using have reasons to not be exceeded, right? High to low in the premium of this range, if I get the fib so you can visualize it, right? Around optimal trade entry, OTE, territory, I'd favor short biases going into the dollar. That's how you have to depict it. Use the tools I've taught you, right? The PD arrays, understanding where you are in the premium discount of a range, the most current range, right? And then you can use, something like the monthly open candle or the weekly open candle just to kind of further analyze it. This is all just to understand where that next daily candle is likely to trade towards. Once you convicted that the daily candle is going to trade one way or the other, that's it. Then you're just setting up, intraday to try and find a way to, get in line with the daily expansion. Now, if you're swing trading, it could be you're trying to get in line with the weekly expansion, which is what I kind of fall back towards now, right? Now, if you go to the FX calendar for the week, Monday is a pretty quiet day. Tuesday we have consumer confidence, and these orange folders all at 10 a.m. right? So you have one red and two orange. Wednesday is also a bit quiet. Thursday is when it starts to kick. On Friday again we have some movers as well, right? So looking at the economic calendar, we see that there's Tuesday, Monday, and Wednesday are dead. Tuesday has a news event. Where do you expect the bulk of the expansion to be for the weekly expansion? Thursday and Friday. Why? Because they have the significant news drivers to build the weekly expansion, right? Now, how do we use this to our advantage? Look at where the daily chart is before Thursday. Did Wednesday do clear manipulation to one side? If it did, then Thursday is likely to be the distribution of the weekly power of three, right? Now, if it's very consolidated until Wednesday, then you have to kind of wait for the market to, show its hand. Even right now, I recommend everyone to essentially be on their hands because if I remove this, is this a environment that you think is high probability, right? Look how tight this range is on the DXY, also on Euro USD. Look at how tight this range is. This isn't something that you want to essentially trade in. Just exercise your patience, right? Wait for one clear side to be offered, right? Wait for one clear side to be offered. Whenever you see a tight consolidation, that is not what you want to participate in. The reason consolidations occur is to build up orders. You don't want your order to be built up in essentially as liquidity, right? Wait and exercise patience. Wait for the consolidation to end and the market to clearly show its hand where it's gonna go. When you can sieve out the likelihood of the next daily candle, or if you're scalping the next likelihood of the next few 4 hour candles to trade towards, then consider entertaining price, right? On if you cannot sieve out one direction, do not entertain it. If you can look at this market right now and say, I can go long and I can go short, because we have a fair value gap above here, right? We have a fair value gap above here. You can short there, right? But then, if you look at the daily, it looks like the daily candle is gonna reach for buy side liquidity. So you got conflicting biases. You can short off this fair value gap or you can long off of it. When you can see a long opportunity and a short opportunity, there is no opportunity, right? You want to see clearly only, okay, I can only see, bullishness being offered here. I can only see buys, being sipped out here, or I can see only shorts being sipped out here. That is when you want to participate in the market. A lot of people got caught in this chop, right? Even myself, I was in a swing trade on Monday and I got caught in the chop and I managed to, I think I uploaded a video before this. I managed to reduce the risk from my 1% to 0.4 and then my child stop got hit. And that happens, that's totally fine. I got caught in an inside weekly candle. There's nothing I can do about that. But what I can do when I'm in a trade is manage the risk, which I did. And, I managed to, you know, take more than half the risk off, which is fine, right? So just remember that. Always exercise caution. I didn't do a weekly report this week because essentially, there was nothing to do a weekly report on. If you go to the 1 hour time frame, on Euro USD, this was the entire week, right? From Tuesday, if we go to the daily, from Wednesday, there was this no clear side offered, right? Especially on the Euro USD. Took the previous day's high, took the previous day's low, and you're just chopping sideways. From Wednesday, this market told you to leave it alone, right? Because essentially after this, I wanted to see the rally up into this, you know, towards this high, and we didn't get that. Understand low probability environments, right? Understand when a consolidation is likely to occur. When that happens, sit out of the market and wait. A lot of you might think, well, that's boring. And a lot of you have messaged me saying you're considering taking the funded challenge. When you're going to consider taking the funded challenge, please take it when the higher time frame is very easy for you to trade, where it's very clear where the daily and the weekly expansion is likely to go towards. You don't want to get caught inside of a higher time frame consolidation like this week. Now, when you do your funded challenge, you actually have the luxury of picking and cherry picking the exact, daily context you want to, start your challenge in. Should you start in a time where the daily time frame is unclear or the weekly time frame is unclear, or exercise some patience and wait till it is very, painstakingly obvious where the daily and the weekly chart is, you know, drawing towards. That can make all the difference for your funded challenge. So that's something to consider. So that's going to be it for this weekly commentary. There's not really much to say in the side of a consolidated week. Um, given that the week is, decent next week, we're going to go back to normal weekly report and weekly commentary. So just to reiterate, I'm still bullish on the Euro USD and I'm still bearish on the DXY. I recommend to, rewind and perhaps watch what I said about the monthly, using the monthly open again, and you can back test this on a new monthly candle, right? Back test this for like 10 monthly candles on your daily chart. Go on your monthly, right? Line the monthly open, and then go on your daily chart from that month's open and see how, if you manipulate one side and then you stay under or above it, and if you continue to stay above or beneath it, how you should only sieve out bearish or bullish trades, right? Of course, using the context of the PWA matrix, like here, we're underneath it, retracement to, rejection block, down, retracement to fair value gap, and I'm still expecting another leg down, right? Something that you can backtest. So until next time, and I'll see you guys in the next one.